Welcome to Drill Down Earnings. We have the latest quarterly results from Comfort Systems USA. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Comfort Systems USA, interesting company involved in technology things we don't talk about here a lot. Heating and air conditioning, HVAC, electrical, that's the business here. I'm completely biased on this because I've owned this stock for many, many years. And now I find them suddenly in the data center business, because that's where they've seen the biggest growth for this age-old Houston-based roll-up of HVAC companies. All right, Q3 earnings, which is what they reported. Wall Street likes a beat or a miss, and this was a little bit of both. It was less revenues than Wall Street had come to expect. The revenue number expectations kept going higher and higher. Earnings per share were better than expected. But I want to dig into the business here, not just the miss or the beat, and let you know what this business is all about. And I'm not giving any stock recommendations. You'd be crazy to buy this stock because I thought it was a good idea a long time ago. Indeed, the stock sold off quite a bit after these results. Let's look at those results. So for the quarter, they had $146 million in profits, which is pretty good, on $1.81 billion in revenue, as I mentioned, doing just a little bit less growth, not only than Wall Street predicted, but less growth than they did last quarter. Still, it was 32% on a year-over-year basis, inclusive of all the acquisitions that they've done. They are constantly acquiring businesses. It's one of those companies that is rare because it's been very successful over a long period of time as a roll-up. Now, their margins also cooled off. I know it's HVAC. I did a cooling pun. I'm better than that. I shouldn't be like that. Anyway, margins cooled off, 7% operating margins. But beyond the headline numbers, what we see is that the technology business, which is a build-out of data centers, has come to dominate. Yes, they're in multifamily and government and retail and office buildings and healthcare and education, but the two big businesses here are manufacturing and technology. So when these numbers came in a little bit softer than the high expectations of Wall Street, you wonder what's going on. Is the data center business cooling off here? But no, the data center business is on the rise. Indeed, for Comfort Systems now, it's 34% of the revenues, their biggest business, and it's really been building fast. 103% year-over-year growth in this technology sector of HVAC. So what's the problem if your biggest business is doubling on a year-over-year basis? Why are revenues not growing as fast as it had been expected? For the first time in many, many years, the manufacturing business slowed down. It was actually 4% smaller than it was a year ago. That's very rare for this company because technology is still growing, but the manufacturing business slowing down, and that kind of hurt overall results. So when the numbers came out, the stock sold off big time, down 12%, rebounding a little more in Monday's session. But overall for the year, the stock's still up over 140%. So really a fantastic move. Now, the big number that people were worried about actually was the backlog. The backlog now below 1, which is to say they have fewer orders than what they've booked in the last 12 months. And that 0.9 times revenue backlog number was just kind of a headline shocker for people who've been accustomed to that number being above 1 often for this company. So does that suggest a slowdown? Well, in the 10Q, which is company reports as concurrent with reporting results, they talked about just finishing a bunch of big jobs. Their Texas operations finished $79 million in 2 big jobs. Their Virginia operations, $57 million in 1 big job. Their Indiana electrical operation, $33 million in 1 big job. Knocking those things off the backlog, that kind of hurt the backlog number, even though they did book a $91 million project in Texas in the quarter. So the combination of those things saw a sell-off in the stock. But in the conference call, it was so interesting. I've been listening to these conference calls for this company for well over 10 years. And what's interesting about it is it sounded like a tech conference call. They were talking about data centers. They were talking about the energy for data centers. They were talking about their expertise in liquid cooling, which is the very cutting edge of what's happening inside the data center. Here's Comfort Systems CFO William George.
Definitely, I don't think any of the new data centers that are being built for any hyperscalers or anybody who's interested in AI are air cooled. And then inside of liquid cooling, now it's just how close can you get the heat transfer to where the heat is being shed off of the chip. And it's kind of an all of the above strategy, right? I used to think it was exciting when we could bring the liquid up under the racks, and then it was exciting when we brought it into the racks, and now you bring it into the box, and they're designing chips for there to be contact, the cool liquid not direct, but near direct contact. Just about every way of doing it. People are, other than immersion, which I think is still a challenge, I think every way of doing it, people are just employing an all of the above strategy. And the good news for us is, no matter how you do it, you got to have the cooling, right? And to do that, you have to have pipes and chillers and electrical switch gear. So I don't know, it's a great trend for us. And the demand for data center stuff, I mean, it's really becoming more than talk. Like there's data centers now in states that it never occurred to us that there would ever be data centers in. So it's the demand there is really extraordinary.
So he says the demand is extraordinary. I know this management team not to be a boastful one. Again, I'm totally biased on this one. This is not stock advice. I don't do that. But the big drill on earnings takeaway, what's it all mean? The one number that tells us a whole lot. So for me, Q3 earnings from Comfort Systems in this company, which I'm greatly conflicted because I own the stock. Your essential summaries this company did had a decent quarter, but not as high as Wall Street's high expectations. So $1.81 billion in revenues, $146 million in profits. But the one number that tells us a whole lot is not the 32% increase year over year in revenues. It's the 4% decline in their manufacturing business, which also led to a slower book-to-bill. That's really what matters with this company. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.